Hello, and thank you for tuning in. Today, we will be focusing on College 529 plans. This presentation is brought to you by the California Society of CPAs. My name is Darrell Young, and I'm a volunteer board member and the chair of the Financial Literacy Committee for the Peninsula Silicon Valley chapter of CalCPA. I operate a wealth management practice in the San Francisco Peninsula area. As you can see in today's agenda, we will be discussing the basics of College 529 plans. We intend for this presentation to be interesting and informative. The data points contained herein are believed to be current. However, please remember that this presentation is intended to convey general information, which may not be applicable to your personal situation. Please do not interpret the information here as advice for your personal circumstances. You should consult with your personal advisor, or certainly feel free to give my office a call. You can also submit a question online through my firm's website, as you can see on the right-hand side. Let's get started by talking about the cost of higher education. Now, looking at the figures in the upper left-hand side, these are probably not surprising to most people. Taking a look at the national average, private universities these days cost upwards of $43,000 per year. Here at home, the UC system, low 30s, and of course an average of public universities around the nation. Now, of course, there are the outliers. Those of us who have looked at, for example, local private universities such as Stanford would know that just according to their website, the figure is more like $64,000 a year. But again, let's just use these numbers for what they are. Moving down the left-hand side, we look at the rates of inflation, which are separated in this case between educational costs and living costs. And let's take 5%, which is on the more conservative side for the inflation rate for the college education costs. Moving over to the right, we see that the cost of college now versus what it will be 18 years from now, you can see that the cost jumps rather dramatically, hence the need for planning. Now, how do families fund higher education? Well, today we're here to talk about College 529 plans, but there are other solutions such as Coverdell educational savings accounts, custodial accounts, and of course, financial aid, etc. Let's take a look at how the typical family funds higher education. The wheel on the right-hand side shows that approximately 1/4 comes from parental income and savings. These days, many college graduates emerge from college with a degree and some debt to go with it, national average being about $35,000. And these are fairly daunting figures. So what exactly is a College 529 plan? Well, from my perspective, the best benefit of a 529 plan is the tax benefit. As you can see here by the definition, it is a tax-advantaged savings program which enables families to save money free of federal and state taxes, so long as the money is used for qualified higher educational expenses, which we will define later in the presentation. As you can see from the history of how College 529 plans came about, the timeline there at the bottom, basically they are made available through a particular section of the Internal Revenue Code, hence the name. They've undergone some evolutions over time, and again, here now, College 529 plans, the best benefit in my mind is the tax-free growth benefit. Now, what are the types of 529 plans? They fall into two categories, as you can see on the left-hand side: prepaid tuition plans and college savings plans. I don't spend much time talking about the prepaid tuition plans because they're rather rare, actually. I'm not aware of any one that's available in California, so let's skip that for now. But looking at college savings plans and how they work, well, you don't necessarily get a lock on the inflation as you might in a prepaid tuition plan, but it's intended to, again, enable families to save on a tax-advantaged basis toward qualified higher educational expenses. Hopefully you'll be able to put away an amount that would be enough to cover the entire extent of the college cost. You are participating in markets, so there is some risk there. There's no residency requirement, so You could put in money into a savings plan and attend university out of state, or vice versa. You could participate in another state's College 529 plan and use those proceeds here in California. And you can open up a plan anytime you want. There's no particular enrollment period. Now, as mentioned earlier, we're talking about qualified higher educational expenses, which are typically defined as tuition, room and board, books and supplies, equipment, and mandatory university fees. As you can see, the bottom right, it's not intended to cover costs before college, so for example, high school or middle school, but it can cover costs after undergraduate, so graduate school, etc. Those costs can be covered. It also is not intended to cover miscellaneous expenses, so for example, transportational costs, or let's say, for example, a student wishes to purchase a car. I mean, those are not the types of expenses that are considered to be qualified higher educational expenses. How do they work? Well, again, as mentioned earlier, you don't have to be a resident of the state in which you are enrolling in the plan. Families can open up an account. So, for example, in my case, I have a son. My son is 6 months old as of the moment. I could open up an account with myself as the owner, name my son as the beneficiary, and I, as the parent in this case, can save money into that account. And perhaps, for example, my son also receives, I'll just make this up, holiday gifts from relatives, birthday gifts, etc. And those monies can, of course, be put into the College 529 plan. There are certain limits, but the limits are rather high, as you can see footnoted at the bottom, and so it's not been a concern for most of the families that I work with. The point being that you can open up a plan with the institution of your choice. We'll touch upon that in a little bit. The monies can be saved in an automatic monthly fashion, or whenever you receive quote-unquote bonus money can be put into the account, and it'll be there for use when my son reaches college age. Because of the tax-deferred or tax-advantaged nature of the account, I would obviously advise people to start early. Like, for example, my son is 6 months old, and this is an ideal time for him to be the beneficiary of such a plan. Now, those of you who have looked at 529 plans before have probably come across some various rating agencies. And you can see here that companies like Morningstar, certain financial magazines, perhaps Business Week, and certain online publications produce ratings. Now, I don't necessarily advocate going by these ratings 100%. I think that you should take a look at them, or have your advisor help you take a look at them in terms of the selection process. But know that College 529 plans are sponsored by states or other agencies, and so there's 50 plus 529 plans to choose from here in the country. So what can your financial advisor do to help you? Well, of course, naturally, you would want to have an overall savings plan. That is something that your advisor can help you do. As we just talked about, there are many College 529 plans to choose from, and so finding the one that is the right fit for you can also be something your advisor helps you with. And then, of course, once you've started the plan, you'd want to monitor it for performance and make sure that you're staying on track with respect to your financial goals. Interestingly enough, note that College 529 plans happen to be very popular for families who want to put away for college. And you see an interesting stat there on the right. Now, future topics following College 529 plans, we'll be talking about custodial accounts, Coverdell educational savings accounts, which were mentioned earlier, investment products, and estate planning. In some cases, actually, College 529 plans are viewed as a tool for estate planning. I'd like to reiterate that my firm, Popular Global Wealth Management, believes that the cornerstones for financial success there on the right are planning in accordance with your goals and your risk tolerance, giving back to your community, working with people whom you respect and trust, and maintaining a positive attitude and competitive awareness. In all of your financial endeavors, we believe that if you are adhering to these cornerstones, then you have the makings for financial success. And remember that there are no shortcuts. With that said, I'd like to thank you for your time and attention. Appreciate you tuning in today. And as I mentioned earlier, I welcome any questions. Thank you.